Hey, it's Nate Davis here, Florida Mortgage Firm. I want to explain the differences amongst what people refer to as construction loans. There's a lot of confusion out there in the public about what truly is a construction loan. So it's pretty much going to be three types. Number one, a lot of people refer to a construction loan when they're buying a home from let's say a national builder who's building a home for you on their lot. Now in that case, in your world, I could see how someone could say, oh, I'm getting a construction loan. You're really not. The builder is basically funding the build of that home, and at the very end, you're going to buy that home with an end loan. So that actually is sometimes referred to as a construction loan in the communities, but for the mortgage side of things, that is not a construction loan. You're simply buying a new home, new construction home, and you're going to purchase it with an end loan. So that is one perceived type of construction loan. A true construction loan is where a consumer goes to a lender or a bank and gets money just to construct the home in which they're building. Now those loans are not typically permanent loans, so therefore once the home is completed, the certificate of occupancy is issued, they would then at that point need to refinance and pay off the construction loan and end up with a fixed rate or adjustable rate, whatever they prefer, standard loan. The downside of starting off with just a standalone construction loan and later refinancing it into a permanent loan is that you do incur two sets of closing costs. You have to pay closing on getting the construction loan, and then later on when you refinance into your end loan, you also incur closing costs then. Additionally, the other inherent risk that you face is what if the rate market is going up on you while you're actually building the home? So you may have locked in your construction interest loan, but your end loan, it could go up depending on the market. It could actually go down, but that's an uncertainty that you face when you take out two separate loans, doing the standalone construction loan and then later refinancing it into an end loan. Possibly the most efficient way to build a home is to utilize a construction to permanent loan, also referred to as a construction perm loan or a CP loan. The benefit of this product is that you actually have one closing and one set of closing costs versus two. Now you can utilize this loan to buy land while simultaneously getting money to build your home with one closing, or another example would be, let's say that you already own your land. Maybe you own it free and clear, or maybe you owe a little bit of money on that land. We will give you a loan to not only pay off any existing liens on the land, but also give you money to build the home that you want. And again, this is one closing, one transaction. One of the benefits of this is we get the appraisal done up front, so you don't run the risk of having your home constructed and later on trying to refinance only to find out maybe you don't have the equity or maybe the rates have changed on you. You eliminate all these uncertainties by doing a one closing construction to permanent loan. So here's a few examples of how you can benefit from a construction to perm loan. You can actually build on land that you already own free and clear and get the money for construction. You can also buy land that you don't currently own without the traditional massive down payments that are required for land-only loans. So you can buy the land and simultaneously get money to build your home with a construction permanent loan. You can have land gifted to you from a family member. So if a family member wants to gift you some family property and then you build on it, you can do so. And you can use the equity from the property to be applied towards your loan, which may reduce or actually eliminate the need for any cash out of pocket. Depending on your builder contract, you may be able to roll in closing costs. If you own land in which you currently already have a mortgage on, a construction permanent loan will pay off that loan that is already on your vacant land while simultaneously giving you money to build the home, leaving you with just one and only one mortgage payment.